I'm Chris Kreger. I am the founder and principal of KRDB and Modular. We're a vertically integrated develop, design, build firm based here in Austin. 25 years. We've been in modular, kind of modular specialist, design specialist for about 20 years. And at first, I'd like to thank Chris Roush and Alyssa and Nolan and the whole ADL team for putting this event on, UT, et cetera. It's given us a great chance to explore some of these questions. The topic of this panel, actually, I think I'm going to change the name after the first panel. It's how do we get to path 3? But the topic of this panel is how do we turn fragmented demand into predictable factory utilization, or in plain English, how do we get modular construction finally to scale? So, as an architect, I'm really painfully aware of the history of industrialized construction. It stretches back over 100 years. No sooner than some of the most kind of disruptive technologies come into construction and Fordism gained full speed, that architects like Buckminster Fuller, Jean Prouvé, Walter Gropius, Marcel Breuer, among a few that were all trying to implement some kind of factory-built housing. Most have failed. Industrialized construction hasn't scaled the way we predicted. The question is why? So having 2 decades in this field, I've seen a few cycles in the business come and go. And for much of that time, I think there's been a belief that some company would come along and crack the code. Or the market would simply open its eyes to to a clearly superior solution. It's become clear that the obstacle is not that simple. The auto industry is often cited as a model for industrialized construction, but perhaps the more instructive lesson is not how IC should be like the auto industry. It's how and why it's fundamentally different. A car built in plant X can conform to essentially the same regulations in every state, cost about the same to build, be financed easily, and the competition will be building there in an almost identical way. So yeah, cars and buildings can both be produced in controlled conditions and benefit from lean manufacturing, but that's about where the similarities end. What we're dealing with here is kind of a 3-dimensional matrix of parameters and pressures represented here by my colleagues from policy, manufacturing, development, and finance. The industry is siloed and it's often proprietary, which we've been hearing a lot about this morning. That's not working. What we need is something more akin to an open source solution. They really teed us up well in the first panel. Thank you, I appreciate that, Nolan. An ecosystem that embraces an integrated process, and there won't be a one-size-fits-all answer. The interventions that work in Austin will look different for those in Phoenix, Denver, or rural Texas. And this is particularly salient in light of the recent Road Act passing. And in the context of this, we're going to talk about levers that fall into the categories of enabling levers and demand levers. So what we want to do in this hour is examine what's working and what isn't for each segment represented here on the panel, and how we'll move forward in a way that opens what we all know is an enormous unmet demand out there. So I kind of want to quick, in the context of the constituents sitting here, I would like each of you to kind of quickly introduce yourself and not going into great detail, but kind of talk about within the industry, portion of the industry you're representing, what you think is working and what is not working. And then we'll kind of jump into some more specific and detailed questions. So Dan, you want to start?
Sure, thanks Chris. Hello? Hello? I guess I have to be very close to my mic. Maybe that was why they were so high when we sat down. I thought this was a very high mic, and now I see why. Hi, I'm Dan Hardcastle. I'm the founder and CEO of BuildTrust. We're creating the data infrastructure in Rails to enable lenders to fund factory-built, infill, and ADU construction. You know, all the things that they don't understand right now, and we need to really get them to wrap their heads around. I also am vice chair of the Casita Coalition, the leading national advocacy organization for ADUs and middle housing. And then I spent the previous 4 years at HUD, where I ran into what Chris described as the long tale of innovation, in efforts to kind of, see the potential of the industrialized construction space, to its fulfillment. You kind of learn that nothing is new under the sun, that back in the 1960s had this effort called Operation Breakthrough that was really about taking the industrialization that had worked in every other segment of the economy and extending it to housing, because we can do it with cars, why not with housing? And that was sort of when they started to learn about what those barriers are, and so had the opportunity to pick up that torch and move it forward for a few years. And I think some of the provisions that we now see in Road to Housing are really kind of the culmination of some of those efforts. The removal of the permanent chassis requirement from the HUD code, which really allows it to take greater effect. Some of the provisions around HUD using its existing authority that it hasn't used over the decades to support off-site construction finance, and then new support for ADUs as a national financing tool. I think the reason why my post-HUD focus has been on financing is that I do see that as the vehicle. Everyone in this space has a lot of great ideas on how to build a better mousetrap, on how to make what's happening in the factory work better, and everyone is really effective at communicating those benefits, to their direct customer, to the developer, to the owner, to whoever's sponsoring the project. But the gap for lenders still remains. Lenders are a conservative bunch by nature, and they're supposed to be. We've had some problems in the past with under-conservatism in lenders that has led to certain great financial crises, and so we expect that of them. But the problem is, as we talk about, and we all know about the ways in which industrialized construction can actually de-risk and project delivery, can actually improve on time, on budget performance. That's not the lens through which a lender, especially a lender who, focuses on site-built construction, which, spoiler alert, is every construction lender. They're the minuscule number of folks who really have specialized in modular construction finance, speaks to kind of this gap, that there's not a means of translating these benefits that IC can deliver into a language that speaks to the average lender who sees this as just something new and novel and weird and unfamiliar, and there's not enough data on it, so I'm going to charge you a risk premium. And that's the same kind of logic that extends to something like an ADU, whether you're building it in a factory or on site, because again, you're talking about something that's an unfamiliar, novel place to put a home. And so from the lender's perspective, our aim is to take all that's novel, all that's innovative, and actually tie together the data that can allow lenders to price it better and give us the financing that allows IC to change the world.
Thanks, Dan. Felicity?
Hi, everybody. Felicity Maxwell. I'm Executive Director of Texans for Housing. We are a housing advocacy organization that works statewide to make housing more attainable and affordable for Texans. I am, yes, definitely the policy person up here, and I'm excited to say, things are going well for us. As you all may have heard, we just had huge federal legislation pass, but even at the state and local, we've seen a lot of changes on the housing policy and sort of politics. And I think that that's been sort of filtered through the expansion of types of housing we've seen, all the conversation we're just having around ADUs and financialization. All of those are suddenly becoming real, I'd say, hot topics, both with folks that are in elected positions as well as policymakers, sort of research tanks. Everybody's thinking and talking about housing affordability. Great. Where are we seeing some pain points? I think it's folks like this in this room. We know, and I just said to somebody else, you all are like light years ahead in terms of what you're building, the products you're producing, how you're talking about it, what you want to see. And on the regulatory side, we're still in the Stone Ages for what you all are doing. And so I think it's really exciting to be here, to be talking to everybody, to understand what we can be doing to help catch us up and to take advantage of that sort of excitement that we're seeing right now around policy and housing policy affordability, and see if we can marry those two a little bit more closely. And I would say, I've had an extremely busy week. I've been at the Capitol, I've been at affordable housing, but it's great to be ending here because I feel like everything we talk about could be improved by the work you all are doing. It's just making sure that we're connecting and helping understand what you're bringing to the market, how you're helping affordability, and that people get maybe rid of some of those outdated ideas and concepts they have about IC, modular construction, everything else. So that's part of our job, is to help make those connections, build bridges, and to understand what you all need to really unleash the market, especially as it relates to affordability.
Thank you. Adam?
Thanks. Hi, Adam Hootnick. I'm the founder of Housing Growth Partners. The mission statement for that company is essentially, how do we create the greatest number of homes that have the best possible chance of appreciating in value, enabling their owners to build generational wealth. That has led me in a bunch of different directions, but one of the reasons it overlaps so well with modular, I believe, and IC in general, is that I think if you're looking at value over time, you can't look at the scale of an individual unit of housing. You have to look at something larger, block or neighborhood scale. And from the beginning, I felt like modular was a way you can come in and change 6 or 20 or 100 homes at a time, and that changes the trajectory that impacts value for homeowners. Helped launch a company in Austin called OMC, Offsite Modular, which was at least initially focused on high-end modular. I've been focused for several years in the Midwest, trying to bring modular projects to areas that hadn't seen them, simply as proof of concept, let people kick the tires and see that it's a house. I think the question that Chris posed to all of us at the start, something that's working and something that's not. I think there's a lot that's working. As on the development side, having helped launch a modular company, but also being somebody putting houses on the ground, I think modular does really well at the things it claims to do well. Speed and certainty really work well. The house comes when you're told it's going to be there. It has exactly what you expected to have in it, and the price is what you expected to pay. Those are the big pluses, and they're working well. What I would say from a developer perspective is still challenging is a lot in the ecosystem once the unit gets pushed out the door. The set and finish and follow through after the fact, particularly if you're on projects that aren't hundreds of units. How does that all work, and how does that get maintained, and what is the right relationship with the manufacturer? And is there an ecosystem of trades who understand the scale and scope and needs of homes built this way to support them at delivery and beyond? That's where I still see disconnects.
Justin?
My name is Justin Murray. I'm Vice President of Business Development for Studio Built by Amherst, a vertically integrated real estate development firm based here in Austin. Studio Built is actually based in Cuero. So I would say from what I'm seeing that's working well is that we are starting to move kind of more towards a standardization of design and floor plans that we could see that bode well to running it right on our line, and we can find efficiencies there. Understanding the costs and how quickly we can produce buildings off of our line. What I think we still need to work on is trying to gain the efficiencies within the early design portions of some of these projects, because I understand that, some developers, even Amherst themselves, they do want to differentiate themselves at one point or another, in order to kind of sell the product, right? So, but at the same time, making sure that design is not so off track from our core competencies that would kind of create a bottleneck in our system. So it's trying to work through some of those issues and trying to move towards a catalog that's more standardized is something that we're trying to do currently.
Thanks, Justin. I'm going to start with the enabling levers. And as Felicity already alluded to, we've got this unusual tailwind with bipartisan support federally, statewide, even municipally, like here in Austin, where we're getting changes in code, et cetera, allowing things to happen. So This past week, HUD, the road to housing became law. Dan, I'm wondering if you could talk a little bit about Section 302 and what you see, what the kind of a couple of aspects of 302 that you think are promising for the future of industrialized construction.
Yeah, so 302 is an interesting section. It actually comes out of the effort that I mentioned earlier, Operation Breakthrough from the 1960s. You know, it was a short-lived effort by HUD to, you know, they literally hired someone over from NASA to create a moonshot. This was the era where we were putting men on the moon, so we can solve housing, 10 million homes in 10 years. That was the aim. That's mind-boggling to think of today. It lasted for a few years. It ran into the oil crisis of the 70s that, you know, saw a drop in the economy, drop in funding. But there were basically two substantive provisions that made it into statute as a result. One was the HUD code for manufactured housing. That was essentially its genesis. It has some other roots, but that was kind of what opened the door for it. But the other was this provision that actually speaks directly to HUD's authority to finance off-site projects. It's 1735 is the provision, and it directs the secretary to ensure mortgages, for construction components prior to delivery on site. That language has been sitting on the books for about 50 years now, and it has not been utilized within HUD's construction programs. HUD's construction FHA programs are primarily multifamily historically, although Road also creates a new program under Title I for ADU construction that I think will expand that use. But it's something that just, no one's taken the time to implement. It's something that we explored during my time at HUD, but just didn't, weren't able to move it up high enough on the priority list. But now HUD has a timeline, within the next year to, fully explore these barriers, and then on top of that to, begin rulemaking. And the most obvious rulemaking we would expect to happen there is going to be around the draw schedules for FHA financing, which, of course, folks in the modular space know that traditional construction draw schedules don't align well with modular processes. They're, with everything being so front-loaded relative to the overall project, it's difficult for the financing to come through in the time needed to secure the factory slot and everything else that needs to happen up front. So this will likely push FHA in that direction in allowing for a pathway, for projects that does provide that kind of upfront financing component to it, and that's obviously going to be huge because I think of the kind of lenders that it brings in. The lenders who are doing FHA construction financing today, these are not necessarily the folks who are on the edge of innovation or on who are currently supporting the modular industry. These are folks who are, providing an insured government-backed product. It's FHA's multifamily construction product. Is well structured, well regulated. It's insured, and so I think that this is exactly the kind of thing that will give lenders who are not looking to break the mold, the kind of comfort and security that they can to start to move into the modular space. But in order to get them there, we're going to need some other components to come into place. We're going to need sureties to follow suit because current FHA construction projects require that there be a surety in place to guarantee construction completion, and of course that's another gap that exists in the modular and offsite space. And so in order for new FHA products to be effective, we also need sureties to move along and for insurers to kind of better understand the risks involved on the factory side. And going back to the discussion on the last panel about the absence of data for baselining across factories, that's a real gap that needs to be filled, both for the industry's own ability to estimate its performance, but also for lenders and insurers to be able to, properly finance and price the risk, so that they actually can appreciate the on time, on budget virtues of offsite construction and not continue to overprice it, relative to site built. So I think that this gives us, these changes give us a potential North Star. It gives us a way that, the industry can point itself towards something that, hey, there is this federal change in the works. This gives us a reason to unlock some of these collaborations, bring down some of these walls that, as discussed, have historically prevented collaboration. And so I think I'm hopeful that as these provisions come online, that it can be something that, aggregates demand, for all.
Sticking with road for a minute, one of the things that seems to be generating a lot of enthusiasm is the removal of the chassis and what those provisions could provide. So I'm gonna start with you, Felicity. And it's already being marketed as cross-mod and having the capability to fulfill some of the missing middle requirements we have. To me, I still am, I'm not gonna say I'm skeptical, but I'm uncertain, and I think there's a lot of uncertainty about it. So I think from your perspective, Felicity, what do you think about this?
I think it's a long overdue, and I think if you'd asked policy folks, both in this industry and outside of it, the chassis removal needed to be done 10 years ago. And so the fact that it's finally finished is exciting. We are going to see the rulemaking from HUD, and then the propagation to where this will become fully legal. But I think the market has already been sort of, to your point, ahead of this, trying to really say what can we build once the chassis is fully removed as a requirement. So that's exciting because you all are ahead of the curve again, and I think that that's the opportunity to help folks understand what that can now be done because we've removed this sort of outdated requirement. I've been really excited to see in other states, Florida and Virginia and a couple of others, where they've basically just said any modular manufacturer can go in any zoning zone, any zone. So that unlocks not only what we changed at the federal level, but now you can bring your products to any part of a city if that happens at a state level. And I think that that's exciting because you all need certainty not only in what you're producing, but where it can go and what can be placed, and not run into a different set of regulations across each jurisdiction in a state and even across the country. So I think the federal level sort of catching up, great, but states also have to give you some certainty about where you can now put these new exciting projects. And I think that was the point that I was mentioning earlier. There needs to be some understanding of what cross-mod is, what it looks like. In Texas, we've actually seen some great examples of this in communities that have great affordability. So again, really hitting on something that we hear our elected officials talking about. But I think that not only what we see from HUD, who is a friend, I think, really to this industry and wants to see more of it, what do we need to do at the state and local level to then give you even more certainty and even more ability to use these new products and to be effective in sort of taking advantage of what's changed at the federal level, both on the financing side as well as on the regulatory side. So I think we're in step one of what may be a multi-step process, but this is why I'm excited, because I think everything we're doing at the Road to Housing Act and then locally at the state level is helping this industry grow. And I hope that that's certainly how it feels. And if it doesn't, start talking to your elected officials.
Yeah, and sticking with the legislative questions and more on a state level, California recently passed SB 1123, making ministerial approval of automatic for up to 10 homes on a single family zone vacant lots, no CEQA, no hearing. Mm-hmm. So this is a zoning tool, not a code tool. Adam, I'm wondering, is this the kind of lever that actually opens up more opportunity for a developer like you? Or does it just look good on paper and you're not sure how it plays out on the ground?
Yeah, I'm not going to answer that. I have no idea. I think that, yes, I think by right, opportunities are by definition better. I'm going to go back to the chassis removal and some of the other questions about this legislation and how that impacts at the buyer level, if I'm the buyer, but ultimately I'm trying to sell to another buyer. I think the GC is sometimes the buyer who has to believe in and sell the quality of the product. I think there are going to be big questions, again, and not questions that I have answers to, about the impact of blending manufactured and modular in terms of the buyer understanding of what those what those are, the processes and the quality of the products that make them up.
Right.
So I think, another thing we talked about just in the prep for this is, is the same set of policies going to have the same set of outcomes in every location, every project? And again, I'm just here to say I don't know.
Justin, I'm curious from a factory perspective, perhaps you all haven't, I know you're very busy with building man camps for data centers, but has there been some conversation within the factory about like what the potential ramifications of this chassis removal are for you as a manufacturer?
Yeah, I mean, I think it's interesting because, when we had first heard about this policy change, we weren't interested in getting into HUD. We were already doing cross-mod, off-frame homes. So I think what this policy change does fundamentally is just opens the doors to potentially more clients, for us. So, and then, whether it opens the doors for the clients, for, on the financing piece, I think also it would be interesting as well. But, the cross-mod stuff is not new to us. That's what we've been producing. We're actually just now starting getting to putting, frames on our buildings by getting into the workforce housing game. So I mean, for us, we only see it as a positive. It enables the factory to get even more code compliance within the factory to kind of, again, just fill our backlog and understand what the demand is for this particular product. So we're excited about it.
Great. I'm going to shift gears a little bit and spend a little bit of time on financing. And actually, I think the reason Felicity and I were connected originally was to talk about ADUs and the market for ADUs, and I think your inclination was that it was perhaps a code barrier, et cetera. And my answer to her was, in my estimation of doing this for 20 years, it's a financing problem. People cannot get these units financed because most lending guidelines require you to qualify with, you can't use projected income. So it seems like the cleanest fix for this may be a GSE or FHA policy change allowing projected rental income for ADUs, towards a DTI qualification using like DSCR principles. Dan, what do you think about that? And are we moving in that direction? Do you think it's going to come soon, or?
Yeah, so that is, another exciting provision, within Road is that, FHA under its Title I program, which is, interestingly enough, every FHA program you've ever heard of is under Title II. And Title I actually came first. It's the original FHA program. It provides both, for manufactured housing, it provides the personal property or chattel lending for homes that are being sited in land lease communities, but it also has a property improvement side to it. And unfortunately, that limit has been capped at $25,000 since the 90s, and $25,000 doesn't do what it used to in terms of home improvement. So it's been a largely dormant program. Under Road, the general property improvement loan limit is going to go up to $75,000 and be indexed for inflation in the future. So that automatically becomes a meaningful new federal home improvement tool. But on top of that, it creates a new ADU-specific loan limit to be defined by HUD that gives us now a national second lien ADU financing tool, which is a huge gap. So many homeowners right now obviously being locked in with, low rate mortgages that they acquired a few years ago. The one tool that exists within FHA right now, a 203K renovation program, we actually, during our time at HUD, were able to make the change that Chris described and update the program to allow for the use of future rental income and underwriting, which is really critical to getting, the borrowers for whom ADUs can be most financially useful, are often not the borrowers who are sitting on 200K in the bank to, finance the project up front. And so those are the ones who really need that future rental income in the underwriting. So we made that change in 203K, but that is a first mortgage product. And so folks would have to refinance on top of that because of another statutory wonkiness. It only applies to attached construction. So if you're converting your garage, you can use that. But this new Title I, can apply to any form of construction. The outstanding question, though, is whether it will incorporate, the flexibilities that Chris described on future rental income, on after improved valuation, things like that. And that's something that, will be up to FHA to define. But what's really going to be important is that there are loans in the market that have those flexibilities that they can look at it. It's a data question. It's something that when I was there at FHA, we were looking to make the 203K change. We were struggling to find loans that had those flexibilities already, so that we could look at how they were performing. And so I think in order to establish the availability of that kind of financing for ADUs, I think that we need more lenders to step in now, start doing ADU flexible financing, so that FHA and then ultimately the GSEs can look at those loans and say, okay, sure enough, this income is real. We feel comfortable making these changes in our buying guides.
Great. So kind of wrapping up the engagement legislative portion of the program, Felicity, setting aside any one specific mechanism, what's the financing or incentive tool you think would actually move the needle for IC adoption at the state level? And whatever that tool looks like, should it work across a full housing transect, SFR included, or is there a case for targeting one typology first?
I think this is such an interesting question because, at the state level, well, certainly in Texas right now, our legislative friends are not necessarily inclined to spend money. So it's a little tricky to convince them that there needs to be a new program to support a specific type of housing. I think the thing that you can also say very, very clearly is that the type of housing we build across the United States today is actually very focused on a specific type of housing, which is single family. And there's a lot of innate subsidies and also policies and zoning and all of that is actually oriented in that way. So in some ways, even just undoing what we already have in place is a type of undoing a subsidy that exists. So I think sometimes it's not so much about the exact dollar amount of like, we're going to give X number of dollars to support innovation or something like that, although I think that that is a great way to frame it in certain cities or states. I think there is also just this recognition of by allowing something like missing middle or, modular across the 10 units on a single family lot, like that's a type of undoing and encouraging of a marketplace that does not actually have dollars attached to it. And I think, I'll be honest, I think we need both. I think those guarantees, I think there was a gentleman yesterday who spoke about the fact that the government actually said that they would commit to buying a certain amount. I think HUD is open to those types of conversations. Can we put some guarantees through federal subsidies that already exist or programs that already exist that are then dedicated to a certain typology? Because that is also supporting a marketplace that has not really had that support and doesn't have as much sort of innate enabling as we've had previously for, single family housing. And I would also just say taking a bigger step back is, again, with this whole sort of positive attitude about housing and where we're at with housing policy, the opportunity is now to sort of think about what would a funding mechanism look like? Where should it target? Which type of projects would benefit the most? You talk about affordable housing, which has a whole LIHTC project, LIHTC framework. How do we get those folks excited about modular and understanding IC and where they can use that effectively? And I think we've seen some of those examples, but they're not as broadly across the market and across the country. What we do as a policy sort of organization is we look at what other states have done and we say, is this appropriate for Texas? So if someone comes to me and said, we created this innovation fund, it produced X number of units, we sped timelines, we made everything more efficient on the government side, that's a thing, that's a story I can tell state legislators here in Texas. And that doesn't necessarily have to have the dollars attached, but it's still something that gets them excited. So in some ways, we need proofs of concept on the policy, advocacy, government side to help you all succeed more efficiently across the marketplace. And I think that that's kind of a partnership we'd like to work on really actively.
Great. All right, we're going to shift over to how we can aggregate demand, perhaps. So Justin, Katera and Factory OS, the standard postmortem on these blames technology and COVID. How much of these failures came down to ecosystem misalignment, the right product in the wrong markets? or a pipeline built on too narrow a customer base or something else?
I mean, when I was looking into this, I mean, it was they're talking about massive companies with very technical ways of doing things. So I mean, from what I've seen, I really would say that they did build kind of like a massive capacity without any just real committed demand. Or like really commitment to, I guess, the product, more narrow of a product, in my opinion. So, when I was, if I was to take a look at it, I mean, is kind of what I was stating earlier is just, you really want to not narrow your focus on one particular market or one particular asset class or one particular thing. You want to be able to be open to many different classes, but then also not be so highly technical on the build, but I mean, you also want to standardize it at the same time. So, the thing that I work on a day-to-day basis is try to work on how do I get a committed backlog and a demand that would actually fulfill my run rates essentially. So the factory is a beast that needs to be fed. Works on cash flow on a day-to-day basis, and if that gets ticked in the wrong direction, even just one day, you can see a ripple effect. And in my opinion, I think that's what happened with them.
And I'm curious, like, how strategic are you able to be about your market mix and what you have in the factory? I know, like, when you get a huge data center housing demand, like, you're just not going to turn that down, but that could potentially be a short-term thing, right? Like that market.
Yeah. So I don't want to really look at kind of what we're seeing right now with the data centers as kind of a bubble, but I'm forced to look at it in that view. It was said earlier this morning, kind of a gold rush mentality behind the workforce housing. The one thing it is doing for us is that it is a repeatable design. I know it's a boring building, but it's a building that we can build at scale, and they're massive orders. But at the same time, I still have to nurture some of the other projects that are out there, because at the end of the day, if this were to burst, then where are we? So there's still a huge demand for residential projects throughout the country. So even as we are maximizing capacity with some of this data center workforce housing product, we are still opening up a portion of our line capacity to fulfill some of those projects that we are still working on the residential side to fulfill. So I'd like to see in the short term, I know we're kind of off balance right now, just because of just the nature of how many projects that are in Texas that need housing, workforce housing. I'd like to see it more on a 50-50 basis of where we can get that standardized kind of low spec type of building on one side of our line, and then have more of a higher spec on the other side, and have a 50-50 balance.
And then what about scale as well, in terms of, like, do you have a sense? Because some of these companies, to me, my postmortem would be like they focused on massive projects. And one of the problems in this industry is especially if you're like working in California, where the vicissitudes of entitlements and financing, you lose these things. And if you save the line time, so planning for that seems tricky.
It is. I mean, it's a huge risk. Really kind of putting all your eggs in one basket with a massive project. I know they're fun and they're sexy to work on and things like that, but if they also take a long, long time, to come to fruition. And if they do fail, then what do you do? So. Kind of how I look at the pipeline that we build and how we facilitate that is there might be some mega whale projects that are out there that we are interested in doing, but at the same time I take a look at to make sure, okay, what's not going to create a bottleneck in our line? How can we scale? Because at the end of the day, we want to employ the community, we want to build at capacity. And continue to grow the factory, and then beyond there, perhaps open up more factories, right? So that's about picking the and choosing the right projects to go after, not narrowing my focus on something that is so niche and so kind of one-off that it would take 100% of my capacity, and once it's finished, it's then it's over. So I try to pick and choose where we spend our time and focus so that we could scale at an efficient rate.
Adam, you built a practice around a repeating type. How much of your ability to engage a factory predictably depends on your specific market conditions, and with the same approach work somewhere with different land cost, zoning, or factory proximity?
Yeah, I mean, so jumping back, I will try to answer that question, but I think this panel is sort of about demand. You started out talking about where the comparison to the auto industry breaks down productization. This is a conference on industrialization of housing. So I think it makes a lot of sense that we're talking about scale, we're talking about standardization. I embrace Rommel's call for collusion. Vaughn calls it path 3. And I think these things all make so much sense. I think one thing that I don't hear as much, and everything's an open question to me. I have no real answers or certainty, but we're not talking a ton about the buyer. And we're not talking a ton about aesthetics. And so, to jump off from where Felicity was on the subsidy that has always sort of benefited single-family detached housing, I come at all of this stuff, at least as a developer, from a slightly different perspective, which is I'm holding the bag for a certain period of time, unless and until there's a buyer who wants the thing that I'm delivering. And so, to me, there's certain aspects of scale and that if we're not also talking about the aesthetic, if we're not also talking about the buyer experience, if you're the military, maybe that's a less significant concern. If you are a scale provider of certain, hotels, but what I have to think about in the units I just delivered in North Omaha, Nebraska, utilizing a more dense typology than is typical in that neighborhood is, how are people going to feel about shared walls? And so I think all of these, coming back to your question, I think there is an education, marketing, and cultural effort that goes along with the financial levers. I do agree that if the price is right, people will move in a direction. Our iPhones and our F-150s can all be productized and can all look pretty similar, and maybe homes can work that way too, but they're not exactly the same. And so trying to, again, I'm not good on answers, I'm good on questions. I'm trying to understand what is different about the home for my buyer where they will move in some of these directions, or what are the incentives that will help move them in some of these directions. But the policy by itself doesn't necessarily get you there.
Have you found, in terms of like the acceptance or how much when you're building these projects in Omaha, is the notion that this was a factory-built product? How much pushback have you gotten on that, or is that something that's been not a difficult sell?
There's been, the pushback is not at the buyer level. And part of the reason I'm doing it in that region is to create I'm an evangelist for modular. I believe this is the future. I'm fortunate to be in a position where I can take some greater risk and push some stuff forward to get it on the ground. And then for the purposes of the buyer, I don't necessarily even need to talk about it being modular. It's a home. And I do want to be able to talk about the benefits of that home relative to the same quadplex across the street that's stick-built. I think at the end of the day, I talk more about that with the appraiser and the realtor than I do the buyer. I was talking with Justin about this yesterday. I think for the most part right now, it's the benefits are speed and certainty, and the price point still has to be equal or better. So I don't see it as a buyer differentiator yet, but I want to see that be part of the conversation at this conference too, is how does it become more of one? And also in the context of if everything is moving toward the HUD code, or the boundaries between manufactured and modular are becoming less clear, like just what does that mean for buyers? No answers, but hoping to hear more conversations.
Sticking with the integration topic, Justin, Amherst acquiring Studio Built solved the developer factory alignment problem through vertical integration. Is this a replicable model or a solution that's only available to players of a certain scale? And what does the ecosystem need to provide for everyone else?
I would say that, having Amherst, it adds credibility to our brand. In the early days when Amherst had purchased Studio Built, it was solely a vertically integrated Amherst Studio Built Main Street renewal thing, so that we would go out and we would go and source the land, and we would build the homes, and we would do the property management. So that on that note, we were able to get some captive demand based off of that. I think it's replicatable because since a couple of years ago, capital kind of hit a wall, right? Studio Built had then opened the doors to other developers. So from my perspective, I kind of use Amherst as a model of what I would like to replicate with other developers. So to say that, it's difficult that a studio, like a manufacturing plant, can purchase a developer, and for a developer, a manufacturing plant's way too expensive to acquire. So it's a very expensive way to get demand, in my opinion. So I think the lesson learned through Amherst Studio Build is that I think any manufacturing plant can kind of get to where we are, just based off of treating developers as we do Amherst as our client. So I try to treat Amherst the same as a customer of mine, and then all the same. So I guess to answer your question, it is difficult to replicate it.
Yeah, it seems like Vaughn alluded in the first panel to the kind of difficulty of total vertical integration. And so it seems like the tenor is more about this open source model and collaboration. I mean, what, in terms of what you all do at Studio Built, like where do you see the opportunities? What are the things that could happen with the other folks, the other people at the table, that could move towards creating more of a kind of open source collaborative model?
I mean, I think that most of the developers that we work with, we try to kind of push towards a standardized product in the beginning of the design phases anyway. So I think as a manufacturer, I believe that the inside of a building is fundamentally the same. So if you walk down, or if you go over to Lockhart, which we were at yesterday, you walk down Applewood Drive, you take a look at 8-10 houses. They all look different from the outside. All have a different kind of look, a feel, aesthetically wise. Roof lines are a little bit different, but they're all two boxes. So as far as like sharing that open source, we're all starting really with kind of fundamentally the same thing. And then I work with each developer just to see, okay, how can we put how can we make the skin a little bit different to kind of differentiate your product, to see where you're trying to attract your buyer. But at the end of the day, I don't really see any pushback from anyone that I work with saying, you got to keep this all quiet. Like, this is all a secret. Like, we can't share this with anybody, right? So I think it's, in a sense, just by nature of doing business, it's starting to be a little bit more open source, but just keeping, open up the rails a little bit, but then keep the engine, kind of a little, kind of like a siloed a little bit, essentially.
Yeah, I mean, it's interesting in listening to the conversation earlier and the kind of Lego analogy. And I mean, for those of us that are the architects in this, and I'm a develop, design, build, but I'm an architect first. And so when people start talking about standardization in the way it was being discussed in that first panel, architects are going to be like, oh my God, like where does that put me? This is all going to become just there's no IP. But I mean, to stick with the Lego analogy, like I could take 10 people in this room and give them a box of Legos and say, make something cool. And, 30 minutes later, we're going to have like 10 different, some will be really boring and some are going to be super creative. And so, I mean, I think
But they all have to be somewhere around 15 feet wide.
Right.
I mean, I've found, honestly, as someone who's been designing modular projects for 20 years, like those parameters, those are helpful, and I do not see those as being limiting. I mean, for me, and the first thing we do when we go into a factory, we ask them, what building system do you work with? What are the limitations? What supply chain do you want us to stay within? Et cetera, et cetera. And then, we've been able to work within that. And I think many of you have probably seen the projects we built, and I think most people would walk into our projects and most people would not know that was a factory-built project. Rommel and I have been commiserating about this for 10 years and having this conversation about how this ecosystem needs to be open. And there's plenty of opportunity for creativity and putting a project together. Yeah, you may have a 500 or 1,000 unit project where you only are using 3 floor plates, but there's so much else that goes into making that building a place, that the limitation of working with that chassis, which I do think one of the analogies that can move over from auto to this is that kind of chassis basis, and I do not fear that at all. We can work around that. Part of the problem with this industry is people are very siloed, and the manufacturers kind of like do what they do. They're not looking behind. They're not looking in front. And if the more of the information about that project and how that product is created, all of those aspects was more shared, we would have more successful projects, and this would be more openly implemented.
Yeah. Well, and I would just say that I think financing is the lowest common denominator here. Every project needs capital, and that's, I think, where there's the most opportunity for industry to align is, given the universal recognition that we need better financing sources. That's, I think, where the data, aggregation opportunity exists. Putting data in front of lenders that shows that these projects deliver on time, on budget. Like that's, I think, where we have the opportunity to really get the industry together, because, that's the ultimate example of the rising tide lifting all boats. If more lenders are lending for offsite, if more lenders appreciate the true risk in offsite, then that's going to benefit every offsite builder.
I'm going to jump in here and say that a big thing we're hearing a lot about is what they call pattern books or pre-approved housing plans. Vermont has a great example where they're doing both stick-built and modular intentionally. And also one of the things that's come up with that is that customization at the end should not bring you back into non-compliance like with local rules. So if someone want to move some light switches, that's okay. And we should have that flexibility. But to your point, that speeds those timelines. You get the permitting faster because 80% of it is replicable. And we see this with sort of mass builders who do suburban infill or suburban development. They have repeatable plans and they just put them on a block and each one looks different, to the point that was made earlier. So I think that housing choice is important, and we should allow some housing choice, but it also shouldn't disrupt the portive benefits that we have with that modular program where you get a lot of the offsite done and then you customize when you come onto site.
I can jump in here real quick too. Also, so I think as far as 80% in the factory, 20% in the field, it really kind of dictates of what the spec that you're going after, really. So some of the things we can't finish in the factory. So if it's kind of like a exterior siding that's not conducive with the factory, that's going to be done on site. So that typically is a bit of a more of a higher end spec, or say high end tile. If you want a high-end tile done, that's typically done on site. So it's really kind of going back and forth with the spec that you really desire and the level of spec that you want to go for. really kind of dictates what's going to be done in the factory. Of course, like you want, I think, on a from a developer standpoint, you want most of it done at the factory because it's going to save you some money in the long run. But at the same time, like there's still going to there is a kind of a ebb and flow of what's done in the factory versus the field.
All right, I think we got to cut it off. Thank you very much. I appreciate
Thank
it.